Bitcoin mining is on fire with headlines this week, quite literally actually with one of them, as we go through earnings season as Bitcoin mining stocks sell off with the wider market. You're listening to the Mining Pod brought to you by CleanSpark. On today's roundup, we've got a packed docket. We are leading with a market update as mining stocks, tech stocks, everything really is bleeding this week. And we also jump into headline stories of how Bitdeer's mining farm in Ohio had an electrical fire. We just dissect that story and what damages we might see from that site and what it might cost Bitdeer. We jump into a story that we published on Blockspace this week on Lava, a Bitcoin-backed lending service that did a little bit of a sleight of hand or bait or switch with its users, depending on how you look at it, for its custodial model. We look at Auradine's recent unit, Nydig, gobbling up more oil and gas facilities, or rather Stone Ridge, its parent company, doing that. And for this week's Cry Corner, Core Scientific delays at CoreWeave facilities throughout Texas and Oklahoma. More on that after a message from our sponsors. You're listening to the Mining Pod. Guys, there is a serious problem right now in Bitcoin mining, and we need to talk about it. You need to pay attention to this. Bitcoin miners are identifying as AI companies, and people keep missectoring them because they say, well look, your infrastructure is clearly for Bitcoin mining. What do you want me to do about it? I'm going to tell you what you need to do. You need to call FBox, the leading digital infrastructure company with all-encompassing cooling solutions. FBox designs industry-leading air, hydro, and immersion cooling systems for Bitcoin mining and AI and HPC data centers. I want to highlight that. If you're a Bitcoin miner who needs to bridge the gap, if you're pivoting or doing hybrid operations, they can build cooling solutions and infrastructure for both your Bitcoin mining and your AI and HPC operations. And they have an in-house API that lets you monitor it from the web or on mobile. So go to www.fbox.tech/contact to learn how FBox can help you optimize your digital infrastructure today.
Okay, welcome to the Mining Pod live. We're ripping a live stream with Colin Harper, EAC at Blockspace, and Matthew Kimmel. I don't remember your title at CoinShares, but you do something there important, right, Matt?
Sure. I'm a digital asset analyst. Happy to be important on the podcast.
Big boy analyst. That's the
important
title.
It's important. You got so many promotions recently. I couldn't remember what your title was. The market's horrible today, so we're doing a live stream just to commiserate with everybody on the timeline. Have our free version of TradingView up. That's how poor the market is. We have to use the free version, and we're down. NVIDIA almost 5%. Google, AVGO, Amazon, a few others doing okay. Apple, Microsoft, Meta, barely squeaking out okay. Bitcoin mining stocks are not doing a whole lot better. So if you look at the averages for those, we're down across the board, like between 5 and 10% for any given stock. We will talk about all those topics and much more on today's show, but we have so many things to go through. This market wipeout is what we'll start with. And then we're going to go over to a difficulty update from Matt, talking about hash rate indexes numbers for the Bitcoin mining space. Then we're going to go over to Bitdeer and talk about the mining farm that burned down in Ohio, 2 units out of their mining farm. Their stock crashing, their CEO ditching the earnings call, Tether selling their stake. There's quite a lot there. And then we'll move on to a piece by Colin talking about Lava, the Bitcoin-backed lending app that had a tough week last week, and Colin did a write-up on that. And we'll finish up with a few thoughts on Auradine, Nydig, gobbling up, honestly. Thanksgiving themed verb. Gobbling up all the different oil and gas opportunities out there in the market. A little adjacent to Bitcoin mining, but Nydig certainly looking at to use those for Bitcoin mining. And then we'll finish with a Cry Corner on Core Scientific in their interview with Cramer. So starting off, any thoughts on stocks crashing this week, gents? How y'all feeling?
I mean, I think that if I can share my screen here, I was having trouble earlier. The Bitcoin mining stocks are saying to the wider market, hold my beer, man, because these things are down week over week just tremendously. And today also they're all down. The ones I have tracking here on TradingView, they're all down double digits. Led by, I have CoreWeave in here, not a Bitcoin mining stock, but adjacent, down 44%. And I've also got the NASDAQ up in here which I don't think this time frame is right because the Nasdaq is certainly down today, but mining stocks just absolutely getting hammered. There's no quarter. The market is taking no prisoners.
It's pretty brutal. I will say on my app here, I see that we have a few names that are up. Wolf is up. Galaxy's up. Oh no, it just updated and everything's down.
Yeah, let's get TerraWolf and Galaxy up here as well.
My Apple Stocks app. I don't know. What it was
Galaxy
doing.
only down 2%, leading. That's on 5 days. On the day, it looks like Bitdeer's up on the day. They're down 46% on 5 day.
So brutal.
Yeah, I mean everything is just getting absolutely destroyed right now.
You know, it's only up that I'm tracking.
What?
Costco wholesale. They're up 0.5% on the day. Yeah, everything is down. That was so funny. Just literally updated as I was going. So, you know, Cypher down to $15. Bitfarms broke under $3 today. They had their earnings call this morning and they missed earnings. And then there was a few other disappointments in there. So they were like lower Bitcoin mining expectations than previous. They also announced their full pivot into AI HPC by 2026, 2027. And so that means that there's going to be like a lot more costs. And I think investors are thinking a little bit more about that. So I saw one number is like 20 billion or so has been wiped off the Bitcoin mining market cap since October. And October could be either like, you know, a local peak if we keep running up again, and this is just a correction, or it could be the peak for this cycle. This last year has been tremendous for a lot of these Bitcoin mining stocks, right? Like Bitfarms just mentioned, they reached as high as $6. They started the year under $1. And then numerous other ones. Iron will probably be the one that people remember this year, right? Where it got over $70 and started at Liberation Day around $2. So that's a crazy, crazy story. It became a meme stock there for a little bit. And then obviously it signed a deal with Microsoft and has that underlying business, but it kind of broke into like, I think that next echelon of retail investors who are interested in growth stocks. So any thoughts from you guys before we go on to the hash rate update?
It's carnage everywhere. This sector's being hit, you know, maybe the hardest, but this is like a portfolio manager's nightmare because it's like risk parity. It's like the gold's down, silver's down, the dollar's down, the Nasdaq's down, the S&P's down, the FTSE's down, Euro stocks down. It's blood in the streets. It's not what you want to see. Yeah, I guess if you ran your diversified portfolio with Costco, maybe that sounds pretty good. I've also got up here Dillard's. Looks like they did pretty good. So if you
We're pivoting back to value stocks,
and yeah, yeah, if you've been shedding tech growth, like there's been all of those people this year, right? And on a day like today, you can send out your gotchas.
You really can. Well, let's go to our hash rate difficulty forecast brought to you by Hash Rate Index. I'll pull that up on the screen unless you have it, Colin.
Yeah, I've got it here.
Nice. And Matt, what are we looking at in the forecast right now? What are you seeing among the hash rate tea leaves?
Blood. Blood everywhere. Thankfully, we just had a small difficulty decrease. I mean, 143 blocks ago, so quite recent, right? 2.37%. Our friends at Luxor hash rate indexes got us at. But that is very small reprieve for what hash prices look like over the past month. Right, we're down. We tested like $40 per petahash second per day, which I believe from last week's show, it's the lowest since the April Liberation Day carnage. Look at that. Colin's got it up on the screen. If you're watching live, again, still nothing to report in the fee market, right? Price has basically been the saving grace that's been equalizing or outpacing hash rate growth. And now we've come off the highs at 126 where we're holding on for dear life at support at 100. It kind of feels like out there sentiment wise. And so that's really what has been influencing hash price, right? You guys want to come in with any color, any thoughts about this? Where we go? Are we going to get better? Is price going to go back up? Is hash rate going to come off the table? What do we think?
Hash rate is definitely taking a breather. I'm curious to see a few things here. Shout out to Val Rousseau and his hash rate forecast for us, because he had it at about 1100, 1200 by the end of the year. And right now we're just under 1100 exahashes. And I think that he's probably going to be pretty on the mark with that. The other thing that I'm watching right now, we just published this report on Russia, right? And there are regional bans in Russia that start November 15th through March 31st, I believe, or maybe it's sometime in March. And those are to conserve energy in the winter to heat homes. And so I'm curious how much of a dent that's going to have. You kind of have this inverse seasonality effect now, where in the US, miners are curtailing a lot in the summer. And in Russia, it's not as much, but there still are miners who no longer can operate in the colder months because of these new restrictions. So I think there's a good chance that hash rate probably stagnates a little bit right now, especially considering public Bitcoin miners are not heaping on hash rate like they have in the past because they're focusing on AI. So, I mean, whether or not it gets better, I don't think it gets much better, but it's hard to see us going below the all-time low for hash price. Like, I think that's like kind of sets a clear floor for where the average miner is right now in terms of their operating cost.
Yeah, I'll throw on there that we can't get the newer gen machines fast enough, right? Below 10 joules per terahash. Miners certainly need that. And I think when you're thinking about the game of efficiency, at first, it's like, it would be nice to have. And then the market conditions change so much that you need it in order to survive. And so these next gen machines firmly are in that camp. If you're going to be running the new Bitdeer units, new Bitmain units, etc. And as we'll talk about later in the show, there's also new Auradine units. So we will continue on. Go ahead, Matt.
We'll talk about it in the Auradine segment. But I mean, is anyone buying them though? They're all the public, at least the publicly listed miners. They're all pivoting all of their operations, their strategies. Who's gonna provide the bid for the hardware moving forward?
I'm glad you asked. Blockspace just put a report out on Russia buying a lot of Bitcoin mining units. So that might be something to dig into if you are interested in the subject. We'll include a link in the show notes. Let's go on to the next subject. You just tee it up and I smack it out of the park. Let's talk about this Bitdeer Bitcoin mine burning down. Colin, can you tee it up actually? And I'm going to find the video that has some images of the mining farm burning down. Give me a moment to find that though.
Bitcoin miner Bitdeer reports fire at Ohio mining site under construction. So this is a wild one, and kind of like Will said during the intro, this is very much just has been a Looney Tunes week for Bitdeer in a lot of ways, and we'll get to some of the other stuff here in a minute. But the company reported a fire at one of its AI cloud facilities in Ohio. 2 buildings were damaged out of 26. They're going to have to redo the buildings that were damaged, according to Jihan Wu. They don't know whether or not transformers were damaged. They're going to have to assess that. But clearly, as we saw at the beginning of the segment, market was not happy with this. And we'll get to some of the other things that the market's not happy with. But, Will, I think you can tee up that video for a little.
Yeah, finally pulled it up. Took me a second.
For a little doom porn for everyone.
Yeah, it's not great. You can see here. I'm assuming you guys can see it.
Yep.
Yes, nice. So my understanding is no actual transformers were damaged. And then it was 2 of these buildings. They have 26 of these buildings on site. So if you're watching this on CoinDesk YouTube, you can see it. If you cannot, I'll just describe it. These buildings are around like 30, 35 feet tall, kind of slanted roof model. And they're taller than most of the mining farms you see most places. It might be curious, like why these caught on fire when they're surrounded by dirt and it's all metal and whatnot. Jihan Wu, who is the CEO and chairman of Bitdeer, said in a tweet that they were welding on site and then sparks flew into the building and cause things to catch on fire. It must have been some sort of electrical fire, obviously, because it's not like this thing is made out of wood or any other combustible material. So that was probably a pretty expensive mistake, though. I wonder what the overall cost for something like this ran for them. And we will certainly find out as they kind of disclose more numbers. The thing that kind of came along with this right after this announcement was their Q3 earnings did not go super well. They missed expectations on a few different things, including like revenue and income. And then also Jihan did not attend the Q3 earnings call. And I think a lot of investors were pretty upset. I believe he was traveling to the Cantor Fitzgerald event down in Miami. So that's perhaps why this happened. But I think right now when the market is spooked, a lot of people don't like seeing that their CEO that they're investing in isn't even showing up for earnings calls. And then the last thing that happened amidst this, if you're still watching this video, if you're watching on YouTube, you can see the broader scope of this Ohio facility. The last thing that happened sort of in a horrible week for Bitdeer all around was they announced a new convertible note for about $400 million. They did the whole thing where you buy the cap calls and all that, and you're able to limit dilution. Matthew Siegel of Van Eck noted that's about 2 to 4% expected dilution, but the market did not like it, especially when it was first announced. There was expected to be like a little bit higher dilution, like around 15%, which of course was further noted down later when more information came out. But the market did not like this. And I think, Colin, you might have mentioned at the top of the show, their stock has really, really paid the penalty for being in the news in the wrong ways a few times this week. So I believe it's down over 40%.
Down 45% over the last 5 days. So, just an absolutely brutal drawdown for them. And, as we reported on Blockspace as well, TerraWolf had a 20% stake in Bitdeer, and it's now unloaded that as well. So that's part of the reason why we're seeing that price action, just an absolutely massive unwind of Tether's position there.
Yeah, I forgot to mention the Tether thing. That was like maybe the worst news in a sense. Like it was happening. Yeah. The Tether sales were happening September through October. And for people who are not familiar with how the sales process works, right? Basically, if you are a company with sufficient size and a sufficient entity standard, you report your holdings to the SEC, and they're typically on a delayed basis, right? So if you trip a certain percentage, sometimes you have to report percent ownership of company, or you have to report it based on a few different rationales. In this case, the September and October sales were reported around the same week as the Q3 earnings. And so you could just see all the large tranches of shares that Tether got rid of amounted to like 7.1, a little over 7 million in total shares, I believe.
Yeah, 7.7 million. And to clarify my prior statements, they still have an 18% stake in Bitdeer. They have sold almost 8 million shares. Now they hold 3.35 million.
And for some more color on this, we covered it in the spring. If people were listening to the show or reading our articles on blockspace.media, they were buying during that period, right? They bought during the run up, and I think they sold here. They earned 166 million from this transaction. That's not including the cost basis of, and all that good information, the taxes and all those sort of things. But they made out with money. And now that Bitdeer is down a lot, it looks like a great trade. I think for investors, though, who are still in on Bitdeer or interested in Bitdeer, they're probably curious, like what the rationale was for Tether. Like, are they actively moving in and out of companies? Do they have maybe restrictions internally on how much they can own of a company, and they just needed to like divest to a certain percentage? That's pretty common. A lot of people have like ownership percentage stakes that they have to stay within a mandate. It could be a lot of reasons. We probably won't know from Tether because they're never going to really say anything. And I doubt Bitdeer does either. But I think all these things culminated in a really bad week for the company. Matt?
I think it was the perfect storm. The loudest piece of news was probably the fire. But the fire it's almost like kicking them while they were down among all this other bits of news. And two things. I just pulled up Yahoo Finance. Bitdeer is literally number one on the top losers. Brutal for Bitdeer.
Wait, for like the whole market?
for the whole market, just on the main page. Absolutely brutal.
They'll be back.
They'll
be back.
Tough time for this convert to come out, right? To basically have the announcement and the dilution amongst all of it. And like the fire, right? It is so common standard practice to have insurance when you have
I'm sure they're fine
for this type of thing, right? So, but it's just caught up in the bad news cycle. Tough week for Bitdeer. But yeah,
I have to dogpile a little more.
Like, how much worse? I don't want to say it. Knock on wood. How much worse can it get?
I actually need to add one more thing, because there was another significant piece of news, which was delays in their Seal 04 chip design. This is a new chip design that like a lot of people in the market are actually pretty skeptical about, where you're able to like reuse the initial energy that's put into the chip, and they call it like this like energy recycling. And they announced that they're having technological driven delays, and that will delay further usage or implementation putting that chip out. And so that was also bad news, I think, for the space, or for Bitdeer to have that. Now they are on the bleeding edge here, and so like that's not shocking to me. And they are rolling out the Seal 03 miners, and they're actually increasing production for that. So I think like the thesis is still there, like completely vertically integrated Bitcoin miner. That thesis is still really awesome. But it was just like, you have those local moments where it's kind of on the downside. Okay, I talked a lot there. Does anyone want to add anything else before we go off to this lava piece, which Colin will chat a lot for? Matt?
One thing. It's just, again, timing wise, the delays for the hardware come out in the news cycle the same time Auradine launches their new product.
Yeah.
Bad timing for all sorts of stuff.
Yeah, and I was going to say that bad news usually comes in threes, but we just covered 4 things that are knocks against Bitdeer over the last week or so. So
they'll be back.
They will be back. I mean, I think that the takeaway for me is hiccups like this. We're going to talk about in our Cry Corner, another kind of supply chain hiccup. And I think this just goes to show that investors' expectations are a little bit higher than they should be. And if this stock is getting crushed this much, then obviously it was overvalued to begin with, like everything else. I mean, these things are just trading at crazy PEs and things. So
we are CleanSpark, America's Bitcoin miner, a publicly traded company with the largest operating hash rate, powered entirely by self-operated infrastructure across 4 states. This is our proof of work, and we are setting the standard for what's next. Learn more about the intersection of energy and Bitcoin at cleanspark.com.
Take us away when you're ready.
All right. So for those of you who are not chronically online, and if you're not, that's good for you. There was a big hubbub last week about this Bitcoin-backed lending app called Lava. So let's rewind a little bit. Lava came out of the woodwork last year with a discrete log contract powered Bitcoin lending app. What this does is it allows a user to lock their Bitcoin into a multi-sig contract with Lava, and the multi-sig contract is powered by discrete log contracts, which are a form of Bitcoin's smart contract, and it basically manages the loan, makes sure that the Bitcoin will unlock once the loan is paid back or upon default, things like that. So a lot of users were attracted to Lava because of the DLCs, and in September, they pushed this update to the app that was mandatory, and people didn't really think too much of it until last week when the CEO, Shazan Meridia, went to Twitter to talk about their most recent raise for $200 million to extend their credit lines. This came with lowered interest rates, but also came, people realized after reading in between the lines of the CEO's posts, with a change to the custodial model. So the update actually authorized users to make a transaction to move their Bitcoin from the DLC contract that they had in their self-custodial wallet that was on a hot wallet on their phone to a self-custodial institutional grade cold storage, or to custodial institutional grade cold storage, which we believe is Kraken based on some on-chain sleuthing, but Lava has not confirmed that. So To recap this whole thing, I think the takeaway from this whole story was you built this entire product on a self-custodial model for Bitcoin lending, which is super important to people who wanted to leverage these products for reasons I'll get to in a minute. And then you push this update where there's no clear indication, and I encourage y'all to go read the article. I have screenshots of the update and quotes from an email about the update. You made it clear that people were moving to a new vault, but you did not make it clear what that new vault was. And it was a completely different custodial model. And that warrants telling your users about it. And a lot of people were incensed by the fact that that was not only not communicated, but that they were signing a transaction when that was not clear. And so in the world of Bitcoin lending, where BlockFi comes to mind, right, and Celsius comes to mind, which were completely different business models even now than what Lava's offering, because those had rehypothecation risks. But the reason why people wanted a self-custodial Bitcoin-backed lending product was because they didn't want to relinquish their keys. And now you show that this wasn't really self-custodial to begin with. If I can just authorize this transaction without my knowing, and am I getting tricked into changing my custodial model? So it's a really bad look for an industry or a sub-industry within Bitcoin-backed lending that is really kind of just rife with examples of breaches of user trust, right? And the ultimate question I kind of posit in the piece is, okay, you seem to have needed to move to a custodial cold storage model to lock lower interest rate credit. I think most users would understand that if you communicated that up front. But the way in which you went about it completely obliterated trust with people who wanted the self-custodial DLC-powered aspect of your product. Now those users are going to move to a competitor like Ligos. But the bet here is you're going to get more people who are interested in lower interest rates but don't care about the custodial aspect of it. Which, if I'm being intellectually honest, I think that probably is true. But I do think that this is going to be a PR sore on the company for a while.
I was going to say that this serve as a bit of a cautionary tale for projects in the space that is a bit different than how traditional companies have to work, because the arbiter of truth is the chain. People can see everything. It's not a black box like traditional financial services have been for ages, where you don't really know what's going on behind the scenes. You can see, right? People know what a DLC looks like. It's a multi-sig. You commit to a public key. You have some kind of oracle. They're really clunky pre-Schnorr with EC DSA, I remember. And there's still challenges with like interactivity and multi-signing rounds and stuff. That's probably why, maybe part of the reason they end up, I don't know, Colin may know, but why they kind of amounted to, for probably practical business reasons, changing model. I don't know, but it's the ledger's public, right? And we've seen similar things with hacks and exploits and words used in marketing versus how things actually work in other chains and ecosystems, other types of smart contract based applications. The hope is that you get more of these Bitcoin native digital services, right, that are a part of, that are available, right, and that projects are building. But they should know that when they ship in production, that people will be able to see how things work, right? I think that's my takeaway.
Yeah, I think it's a different age with on-chain. We see this a lot with the Ethereum-based DeFi ecosystem, right, and Solana stuff now, where so much of the stuff is on-chain, and you're able to just look through your lending position, the account health, the assets behind it for those positions. And then as of this week, Cash App is also going to be using Solana for stablecoin usage. So you'll be able to kind of look at that stuff. I think paired with the ability for AI to start kind of like parsing through this real time as well, the information's only going to get better, right? There's already like a lot of blockchain explorers out there that are pretty great. And there was some data that you used, Colin, from this piece, from someone just kind of going through the different addresses for Lava and figuring out that it was most likely in a Kraken custodian model after the update. These sort of pieces can just get pulled apart a lot more quickly because blockchain explorers are getting pretty good. And then 2, the AI component, people are going to be able to do this a little bit more easily. So that's one thing. Matt?
Sorry, I just want to say one more thing before I get slaughtered by the Bitcoin community, because it is different in Bitcoin land versus some of these other chains, particularly with how signatures work and what is revealed, right? And also if it's on the base chain versus something like Lightning, what is publicly available information is very different than the other chains. So you could have, there are privacy implications as well, but still the broader point still serves.
Yeah, but to your point, one of the sources that I talked to said that people were, even before Shazam's message on X, they were figuring out that funds were moving on chain. There were people starting to realize that funds had been moved out of an address that belonged to Lava. So the transparency is definitely a win for users and a loss for the companies if they're obviously not being honest about what's going on under the hood.
Yeah. Well, we can depart from there. If you're interested more in the story, go to Blockspace Media and just search for Lava. We'll also include a link to the article in the show notes. And of course, you can always sign up to the newsletter, blockspacemedia.com/newsletter. I got that URL wrong, but it's below if you want to click on it. So it's all good. We will keep moving along to the next story, which is Auradine announcing a new unit.
Yes.
So I can pop that one up.
I've got it.
Wow, so fast. Okay, so Auradine is one of the America-based manufacturers for Bitcoin mining units. They came out of stealth 3 years ago at this point. They've had a few generations come out. As of this week, they've announced their next-gen Teraflux Bitcoin mining rig, achieving efficiency of 9.8 joules per terahash when in eco mode. That is around the same as incumbents like Bitmain, MicroBT, and Canaan, or at least it claimed to be. When it's not in eco mode, it has a little bit higher terahash output. So it's 310 terahash per second when in normal mode and 240 when in eco mode. The joules per terahash gets, I think, around to 11 when it's not in the eco mode. They're also coming out with a hydro-cooled and immersion-cooled version of it, which is pretty standard at this point for companies to kind of roll out 3 different models at the same time. For those who might have forgotten about Auradine, Mara has a pretty big stake in them via Series B raise, and they raised $150 million to pursue this dream of being a American-based Bitcoin mining manufacturer. Of course, Bitdeer, Proto have also launched new units this year and are doing a lot of production out of the US. The Bitdeer seems to be more out of Singapore and the Far East. I'll throw it to Colin for more color.
So the most interesting part of this press release is missing from it, and that's how many of these are they actually manufacturing? It's the biggest question I have. And will they actually onshore to the US? Because the IP is American, but the manufacturing, like basically every other manufacturer except for Bitmain and MicroBT, who have some US capacity, maybe Canaan at this point, it's coming out of Southeast Asia. They've always ducked questions about that whenever I've asked them. And they've also ducked questions about manufacturing output or capacity. I think last time I talked, they kind of vaguely said they were roughly in the 10,000 unit per month range, which is fine to start, but you eventually need to get much higher than that if you're going to compete with Bitmain and MicroBT, or specifically Bitmain. And so that's my biggest question is like, what's the actual capacity for this? And then I think that leads into another question that Matt had before we went into the show. So I'll let him field that one.
I'll just jump in and say, you can answer it, Colin. Who's buying them? Who's going to buy the machines?
So we know Marathon's deploying some of them, which is my other question about capacity. It's like if I, wait,
do we know that Mara is deploying these?
Yeah, for sure. They've said that they've been deploying Auradines in their facilities, which, they invested upwards of $30 million into Auradine. So like they definitely want to get that bag. They're probably getting a discount on those machines. It's a great deal for them. But that's what I would want to know if I were one of Auradine's other investors is how much of that is your capacity? Like how much of Mara's allocation is your overall capacity per, month or year, whatever time frame? because that will give you an idea of like how much they can actually sell into the other market. And per Matt's point, none of the other public miners are buying Bitcoin miners right now. So then you have to bet on them liquidating supply into maybe obviously the private market, but other places, maybe in Asia, South America. They can't go to Russia because of sanctions. So it's a great question, kind of. And I was thinking earlier, Matt, when you brought up Auradine, we were talking about Bitdeer and all of the snags and the chip, delays. These miners, I just couldn't help but think like these miners who were trying to break into the ASIC market honestly picked the worst time. It seemed really good early on, and then the AI pivots happened, and then it decimated their primary buyer, or what would have been their primary buyer. So a lot of questions regarding not just Auradine, but Bitdeer and Proto, whether or not they can sustain these businesses, right? Is there actually a market to sell into them? Because I was talking to a mining exec recently. He said inside baseball at the Malaysia facility that I had toured in 2023 in Malaysia for Bitmain, they can produce maybe those machines at $5 to $6 per terahash. If you can't get to that with Bitmain at the scale they're at, you're not going to be able to compete with some of these other companies. Bitmain can effectively set the price for the market. Like they control the price for hash rate.
Yeah. I mean, it's hard to get to that point though. So I think that would be the thing is like you have the crawl, walk, run model for a lot of startups, but it doesn't seem like that can really happen for these ASIC manufacturers. You sort of need to have like this large upfront capital. You need to produce something that is competitive, and you need to go sign deals as quickly as possible, because every single day an ASIC is sitting on a rack. It's becoming more and more obsolete as new units come out. I mean, we're saying things about 2 nanometer chips for Apple now. Who knows if Bitcoin mining ASICs keep getting smaller? The nodes have gotten smaller, but it seems like the efficiency processes matter a little bit more at this point, and maybe the node size doesn't matter quite as much in the future. But at the very least, we do know that the joules per terahash continues to crunch down, continues to get smaller. And Auradine has been on the wrong side of that ever since it came out. And more recently, Proto's rig has also been on the wrong side of that. And so we haven't really seen any order announcements for either of these two manufacturers, even though they're here in the US. Now, I think a lot of people in the US would love to see that happen. And maybe there's some small private orders occurring, but we haven't really seen any large orders. You're right, though. I looked up the Mara thing. They did announce that about half of their purchases for 2025 would be from Auradine. I think it amounted to around $20 million. So that's great that they're getting some orders in, but we'd love to see it grow a little bit more. The directional bet they made was that the US, North America in general, would continue to be a large market for Bitcoin mining. It seems to have tapered a lot with AI HPC. So you're going to have to start looking internationally, perhaps, which gets maybe a little bit better that you're exporting from the US to these other countries versus importing to the US with all the tariffs going on. Yet you're going to have to build a whole sales team for that process and start working outside. So more to come on that one. It is a big deal to announce a new unit, however. So congrats to their team. Matt, any final thoughts before we go on to the last few stories?
I like to see the units competitive against other manufacturers. I would love to see a more diverse market share in the hardware producer space, but you guys already all hit on it. Bitmain has economies of scale. They have the relationships and capacity at the fabs. And the outstanding question, right, is there going to be a bid broadly sector-wide to really support the hardware producers in this era of incredible AI growth and pivot? So outstanding questions, but good to see that they have a unit that's got a good efficiency rating.
Well, I will pull us over into a different topic, which is the private mining market, and we're going to talk about Nydig, New York Digital Infrastructure Group. They are a private Bitcoin miner. I believe their last valuation I heard around was north of $10 billion. And I think the last time we talked about them on the podcast was when they announced they had purchased some major oil and gas operations down in Oklahoma. They're in the news again. I wouldn't say really in the news. This is pretty small, kind of hard to find. We found it through a friend in the space, that they are purchasing a $2.3 billion private company via the Stone Ridge flywheel. They're going to purchase Eagle Ford. Don't have a lot of information what this amounts to, but yet another oil and gas purchase for Nydig, which has been, again, pointing to the Oklahoma story I just mentioned, has been purchasing oil and gas operations services in North America, mostly in the US, and kind of picking those pieces up and putting it as part of a portfolio. The other component I want to raise here, and this is sort of a half-baked story, which is why it might be confusing to listeners a little bit, is that they've been going around trying to purchase some Bitcoin mining assets from different companies in the space. And so I think that's just kind of worth mentioning. Colin has up here a story from earlier in the year, I think it was May, when Nydig acquired Crusoe's Bitcoin mining operations. Crusoe's Bitcoin mining operations were mostly on natural gas flaring sites. These are some of the largest natural gas flaring sites in the entire Bitcoin mining ecosystem. So with these private companies, you kind of have to read between the lines to understand exactly what they're doing, because you're never going to get the info out of them. Stone Ridge, though, from the public headlines we get from these press releases, we know they're buying up a lot of oil and gas services. We know that they have a very large mining arm, and they're trying to grow it actively by purchases of other private mining ops, whether it be the Crusoe one that we know about or some other ones that have been rumored and whispered to us over here at Blockspace. So I thought this was a fun story to kind of throw in there. We don't have a ton, but I wanted to throw it in there this week. Colin?
Yeah, to me, it's just validation that what Bitcoin mining will survive in the US will be at the energy level. And you have Nydig, rather Stone Ridge, and Nydig in concert. You know, Nydig is a subsidiary of Stone Ridge, buying up Bitcoin mines and oil and gas assets. One of the headlines that I just pulled up to speak to what you just said, Will, Stone Ridge buys ConocoPhillips assets in Oklahoma in $1.3 billion deal. This other one is in South Texas. And if the Crusoe deal closes, I haven't seen anything on that. It was announced back in March. I haven't seen details on the close yet. I'd be really curious if they give a dollar figure for what that ends up closing at. But clearly the play here is all these other Bitcoin miners are getting out of Bitcoin mining into AI and HPC. Stone Ridge is saying we have an edge here with our oil and gas portfolio, which is growing by the day. So I think this is something to watch. It's super interesting to see the oil and gas mining thesis play out with a company as big as Stone Ridge.
Cool. I think we can go to our last story, Cry Corner. So I'm going to play this little clip from CNBC earlier in the week between the CoreWeave CEO, Michael Intrador, and Cramer. And I think we'll talk about it after the clip. It's kind of a longer clip, so we'll listen to the whole thing. But I think it's worth sticking around for because it's a very telling dialogue between the two. I got it here, Colin.
You got it? Okay.
First on CNBC interview with CoreWeave Chairman and CEO Michael Intrador. Michael, I appreciate you coming. You don't have to waste time saying hello. Let's just get right to this. Okay, so this was not the quarter you wanted. It was not like you told me or anybody, hey, this was a great quarter. You don't know what you're talking about. You did not do that. You were not proud of this quarter. Why?
That's not true. I am proud of this quarter.
Well, okay. No, come on. You're proud of demand and that they want you, but you missed the quarter.
So I am proud of all the things that we have accomplished this quarter.
Okay.
I am proud of the infrastructure that we brought online. I am proud of the incredible progress we've made within our software. I am proud that we were once again identified as the singular best solution to deliver artificial intelligence to consumers. I am proud of our backlog build. Quite frankly, every single part of this quarter went exactly as we planned, except for one delay at a singular data center.
At a singular data center?
At a singular data center provider.
That's better, because people may think it's one complex.
Yeah.
But in reality, when I go over the numbers, we're talking about multiple places, and it just so happens that the places are all connected with an outfit called CORZ Scientific that you tried to buy. Denton, Texas, Austin, Texas, Muskogee, Oklahoma, Marble, North Carolina, Dalton, Georgia. Aren't these the problems that you have with CORZ Scientific?
So look, Core Scientific and CoreWeave have been working together to bring on infrastructure for a long time, and we are going to continue to bring that on. You're going to see the infrastructure that was scheduled to be brought on in Q4 coming online in Q1 almost entirely. There'll be some that kind of comes on in Q2. You're building massive scale infrastructure. It's very physical. It's very large. It requires coordination across all of the trades, the physical construction, and there's a delay that hit. This delay will clear itself, and the infrastructure will be brought online.
But why did you use a failed Bitcoin miner that came out of bankruptcy as recently as 2024 and counted on them? And was this one of the reasons why you wanted to buy them? Because this is not you. This is not the way CoreWeave works. You don't make promises and then not deliver.
Yeah, so look, they have infrastructure, they have power, they have physical data center capacity. They're a good partner. We're going to work with them as we continue to build.
Are you losing any customers because of their influence?
No, absolutely not. We're not losing any customers. And what's really important is all of the contracts that reside within those data centers are being shifted out by the clients of ours. So there's no revenue lost. The only impact on us is a delay of a quarter that you're going to see clear itself shortly.
And you still have huge demand from Microsoft? How about from Meta?
There is, as I have said every time I'm on the show, there is insatiable demand for the infrastructure and product that we provide.
Thank you.
This is a delay that is associated with the physical component of this business. It is a delay that will get fixed and passed through. And the other point I want to make that's really important is getting a data center online is difficult. Running the physical data center is not very difficult. And so once we get this infrastructure up and deployed
for your company.
For our company, but even for the data center providers, I'm talking about like running the cooling, running the power through that stuff is not particularly difficult. It is getting the data center up to the point at which it can be handed over to us as a functional power shell so that we can go ahead and build the supercomputers inside of it. We are better than anyone else in the world at running those supercomputers, standing them up, getting the best performance out of them, and that will be true as soon as this infrastructure comes online.
I've always wondered or tried to understand what is it that your core competency you just described, you are the best at doing that.
Yeah.
What goes into being the best at it? What do you know how to do that others perhaps don't know how to do as well?
So when people talk about CoreWeave, they talk about it as, we're a data center provider. That's actually not the majority of our business. The majority of our business is around the idea that we have built this proprietary software solution to be able to run and deliver supercomputers for the most voracious consumers of compute in the most effective, efficient way. And that's what we do, right? We've built the software layer that allows us to run the physical infrastructure inside of the data center better than anyone else. We recently, like within the last week or so, were once again found to be the single best provider by an unbiased third party that went and looked at all the solutions, all 200 of them that exist out there, including the largest hyperscalers, including the neoclouds, and we were the only ones that were awarded the Platinum Award, and this is the second time. No one has ever won that other than us, and we have won it 2 years in a row.
Any thoughts? I got a few.
I want to echo just one thing about him saying like getting the data center up is hard. I think just zooming out and looking at the fire that we saw with Bitdeer, obviously that's not a supply chain thing, but it is an operational thing in terms of getting one of these things online. And then if we also look at the chip delays with Bitdeer, if we look at some of the stories we covered on the Mining Pod a few weeks back about some of these data centers requisitioning jet engines, well, not requisitioning, but purchasing and salvaging jet engines so that they can power their data centers as they look for additional power on the grid. We go to these conferences. We were just at NABS. One of the things that we kept talking about was there are all of these supply chain shortfalls and squeezes. If you do not have a good pipeline and a bunch of different distributors, people were scrambling for everything from PDUs to transformers. It's tough out there, and I don't think that Core Scientific is going to be the only one of these providers with a delay. I think that if you think that every single one of these neo clouds, every single one of these Bitcoin miners pivoting to AI is going to nail their delivery timeline, you aren't paying attention to what's actually happening on the ground in terms of raw materials. And so I understand why they're hammering CoreWeave in a way. Jim Cramer really went on the offensive there, talking about how Core Scientific was a bankrupt company and you're trusting him about all this, this really important thing. I think he went a little too hard. At the end of the day, this is something that a lot of companies I think are going to butt up against. So
I got the Core Scientific share price up on the screen. So as of recording Thursday, November 13th at 15.24, it's down 7% on the day. The rest of the market's also selling But it's been selling off all week, and as has CoreWeave, which I can pull up here in a second. The biggest drop came, I think, after this Cramer interview. And, the Q3 earnings for Core Scientific did mention and discuss that there was some delays. And then, of course, the CoreWeave information followed up on that. So I'll pull up CoreWeave here. And I think that's like one thing to note is like, despite that fact that CoreWeave did not purchase Core Scientific, they're still just so interwoven. I have a hard time coming up with a CoreWeave ticker. It's CRWV, right?
Yeah.
Yeah. So they are down 7% on the day, trading just under $80
do the 5 day though.
The 5 day.
Look at that gap.
Yeah, the gap is crazy.
Brutal.
Dropped from $100 to $96. So it's a $4 gap there. But looking at the 3 month or even the 1 month, and you can see that they've dropped from a high of 147, and now they're at 79. So they're coming up on being split 50% in half there over the course of a little bit here. The Verge, a pretty well-known media publication, has a more or less, it seems like a hit piece coming out on CoreWeave next week that they started to talk about. And I'm interested to see how the market reacts to that. I think CoreWeave is really misunderstood by a lot of people in the market. Michael Intrador mentioned on that interview with Cramer, the semi-analysis piece that gave CoreWeave the top orchestration crown, I guess is maybe the word to use, compared to all the other neo clouds out there. And so they're kind of like the preferred way of running GPUs, or the preferred provider for orchestrating all these GPUs.
And to contextualize that, sorry, Will, to interrupt, but like semi-analysis isn't just like going and rating them willy-nilly. Like they go through and test all of these different products, and then they release these reports and these ratings accordingly.
Yeah.
Regarding the Verge piece, I think that's going to be really good, like AI doomer porn for people who are like hate AI or just like passively interested in it. But I would be shocked if the Verge unearthed any information that traders on Wall Street don't already know about CoreWeave and what's going on, right? So,
yeah. The semi-analysis piece, which we can dwell on for a second, they come up with that once a year, and they're kind of become like the go-to publication for understanding like the GPU landscape. And, they do a lot of the data center coverage as well. CoreWeave is always at the top of it 2 years in a row. There's tons of different cloud providers you can look at. And the people in the second and third rows are also amazing companies like Google, FluidStack, Amazon, etc. So, they're really, for a company that was an Ethereum mining company 5 years ago, it's pretty impressive. But the market is still belching up on all this, right? It's doesn't really care. I think people are either aggressively selling to the sidelines for tax reasons rolling into next year, which is probably a lot of this happens in November, or they're just starting to disbelieve some of the CapEx numbers that the likes of Sam Altman and others have thrown around for a while. Matt, any takes?
Talked about timing earlier. There's like another instance of, we're in a kind of broader sell-off across a lot of these types of companies. Like NVIDIA today is down 4%. I just did a quick back of the napkin math. It's like $180 billion of market cap lost in a single day for a single company. But yeah, these types of delays can happen for a wide range of reasons that could be outside of even Core Scientific's dealings too, right? Like they have their own partnerships with different kind of like electrical supply companies, right? Things like that. So I don't know exactly what it's due to, but yeah, Cramer aggressive, real lashing to the CoreWeave CEO.
That was a pretty tough little interview there.
Yeah.
He said, no need to say hello. No need to say good morning. Intrador looked tired, man. He looked like he got like 6 hours of sleep, 5 hours of sleep, was rolling into CNBC in the morning.
Yeah. It's earnings season. Don't badger the guy. I mean, they missed earnings, but maybe the market needs to chill the hell out about what they're expecting out of these companies. I mean, just a few things as we close out the show. part of the reason why the market's selling off, one of the narratives is people are worried about the AI bubble. I think to echo Matt's point, like things are just generally getting liquidated. And to your point, Will, maybe it's tax harvesting. I think some people are just like trying to get some money on the sidelines in case the bubble, it really is over this time. But some of these reports that have been coming out recently, McKinsey & Company projects 6.7 trillion in data center capex in the US by 2030. Maybe that's global, of which 5.2 trillion is AI related. And JP Morgan says estimated AI infra will need 650 billion. So this tracks with that capex number in annual revenue by 2030 just to generate a 10% return. So people are starting to ask, like, when is the return on, when are the returns coming in? Think, you can obviously look at this bubble versus .com and say, well, the actual tooling is here that people are using it. The daily active users are much higher than the internet in the early days. And Matthew Siegel had a great point about this, where he's like, data center capacity in the US is like 97%. The .com bubble, fiber capacity was at 3%. So the usage is different, but the spend is just obviously crazy. And so I think a lot of people are starting to wonder, is the music starting to stop?
Yeah.
But if you're super bullish on these stocks, you're probably loving this sell-off, because if you're bullish long-term on some of these, like, you're looking at some probably pretty good entry points, unless the market just shits the bed in the next 12 months.
Yeah, there's some good comments, and I'll throw one up on screen, actually. Here's one from Frank. It used to be that miners were correlated to BTC in the cycles. Now miners are correlated to HPC in infrastructure opportunities. I think that's true to some degree. I mean, we still saw that Bitcoin has been selling off, and that certainly has limited the pumps on the days when you saw a lot of the AI stuff go up, right? We have seen Bitcoin mining, those who were formerly Bitcoin miners, not pump as hard when Bitcoin goes down. So I think there's still like a little bit of correlation there. For the most part, I think Frank's comment is correct. Matt?
I tend to agree that these types of HPC deals are the main factor that's been driving prices lately. But I think it sometimes get lost in these discussions that a lot of the revenue that will actually be booked for these deals are years into the future, that the vast majority of where revenues come from today for this cohort of companies is Bitcoin mining still.
And that creates a difficult... That's a really good point, because it creates a difficult balancing act for phasing out the Bitcoin mining. Because if you phase it out too quickly, then you just lose a chunk of revenue that's going to shock investors when you have your earnings.
And that's what happened at Bitfarms this morning. They mined less Bitcoin than expected. And I think that shocked earnings to the downside. So you do have to phase things correctly. One mental experiment I was actually thinking about last night is, if all this AI HPC stuff had not happened, where would all these mining companies be? And network difficulty would be seemingly much higher. Hash price could even be lower. And all these companies would be, purchasing ASICs into those racks that they've been developing for AI HPC, but they'd still be at the multiples that they were prior to this. So despite the 20% correction, the 25% correction, it's much better to be where you are right now. Matt?
Financing landscape, way different.
Totally.
Yeah. And I think that given the pressure we're seeing right now, you might be entering M&A season, if that were the case. Like, if AI and HPC just weren't on the table and all these miners have been scaling aggressively and maybe some of them got too reckless and now hash price is getting obliterated, you might have actually seen some consolidation. It's kind of an interesting counterfactual. I miss talking about Bitcoin mining all day. Come on, guys, buy some Auradine units, buy some Bitdeer units, buy some Proto units. Like
Steve Barber, one of our favorite Bitcoin miners, is complaining to me in DMs about this. Not to out you, Steve, but he's like, when is the mining pod going to talk about mining again? And we're doing that. We had the Auradine story, the Bitdeer story, brought up Bitfarms a little bit. So it would be good to have more mining stories, though.
Maybe some of these mining companies would weigh in more on soft fork debates to try to spur a strong fee environment. Probably
would be good.
This is it's a pipe dream.
Well, we are pulling up some dregs in our conversation here, so we will end it. Colin has a lot of great shows coming out right now with quarterly earnings going on. So if you are interested in a particular Bitcoin mining stock, go to blockspace.media or go to our YouTube channel, Spotify, Apple, etc., and you'll see those conversations. So we just published one yesterday with Jonathan, the IR team member at Galaxy Digital, And we're going to publish one with Patrick Fleury, the CFO of TerraWolf. We'll have some with Bitdeer actually coming up in a little bit. So that'll be a great time to have some conversations with them. And I think a few more going into the end of the year. So again, if you're looking for more conversations on specific stocks, be sure to go search for those. And as always, follow us on X. We just got the @Blockspace handle on X, which is kind of cool. So go follow us there. Matt, Colin, see you guys next week.